Good morning. Today I want to discuss one of the most promising investment opportunities available in Kenya, and that's the Kenya Treasury Bonds. Well, these bonds are represented, or let me say they represent a cornerstone of Kenya's financial market. And of course, it offers a plethora of benefits for both domestic and international investors. First and foremost, Kenya's treasury bonds are backed by the full faith and the credit of the Kenyan government, making them a secure and reliable investment option. So with stable political environment and commitment to fiscal responsibility, Kenya has established itself as a trustworthy borrower in the global financial markets. One of the most compelling reasons to invest in Kenya's treasury bonds is the attractive returns they offer. The interest rates on these bonds are competitive, and of course, that provides investors with a reliable source of income. Whether you're a risk average investor or seeking steady returns, or a savvy investor looking to diversify your portfolio, Kenya's treasury bonds offer an appealing investment opportunity. Moreover, investing in Kenya's treasury bonds contributes to the country's economic development, and of course, with that comes growth. The funds raised through these bonds play a crucial role in financing essential infrastructure projects such as roads, schools, and hospitals, as well as social programs aimed at alleviating poverty and promoting inclusive growth for everybody. So the Kenya's financial markets are known for their liquidity. They're also known for their transparency. So with all this, it makes it easier for investors to buy and sell treasury bonds as needed. Whether you're a large institutional investor or an individual investor, Kenya's treasury bonds provide accessibility and flexibility to meet your investment objectives. Furthermore, the country is committed to fostering substantial development and environmental conservation. So by investing in the treasury bonds, you're actually supporting initiatives aimed at promoting environmental sustainable social inclusion and good governance, aligning your investment with the broader sustainable investment principles. In conclusion, of course, I would recommend you invest in Kenya. But the reason why I say it's important to invest and why it's good, other than the tremendous opportunity that lies in investing in these treasury bonds, and Kenya being a vibrant and rapidly growing economy in the heart of East Africa. So investors, of course, get a range of compelling reasons to consider treasury bonds as a cornerstone of the investment. So besides offering the stable and secure avenue for preserving and growing your capital, these bonds are backed, of course, by the full faith and the credit of the Kenyan government. Earlier on, I talked about the importance of having good credit for a government. So being the credit is quite good. It is a safe investment. And with prudent fiscal management and commitment to economic stability, Kenya has demonstrated the resilience in the face of global economy uncertainties as other countries do experience. So they offer very attractive returns compared to many developed economies, even in the surrounding East African region. The interest rates on these bonds are competitive, providing investors with a steady stream of income. And whether you're seeking regular investment interest payments or long-term capital appreciation, these treasury bonds offer a compelling investment proposition. So beyond this financial returns, these bonds contribute to the country's development and prosperity. By chasing these bonds or by purchasing these bonds, investors are directly supporting critical infrastructure projects, social programs, and initiatives aimed at driving economic growth and reducing poverty in a developing country. So your investment not only penetrates financial rewards, but also makes a meaningful impact on the lives of the Kenyan citizens. So my diaspora friends, this is the time to invest in these bonds. As you all know, the vibrant financial markets offer this ample liquidity. It's transparent, and it's very easy for investors to buy and sell treasury bonds as they need. Whether you're a seasoned investor, like I said earlier on, or looking just for diversity, these bonds provide accessibility and flexibility to meet your investment objectives. But there's also the dark side. And what I want to talk about is why third world countries typically offer a higher interest rate bond compared to the developed world. So before you, let me shed some light on this intriguing aspect of global finance. Why the third world countries offer higher interest rates on treasury bonds compared to the developed world. As you can see, the interest rates they offer are very lucrative. Some of the reasons why they offer these high interest rates, a treasury bond in the US or in Europe would be at 1 or 2%, while in Kenya it could be anywhere from 8 going all the way to 15%. The reason why it's an attractive investment yet risky is, of course, the elephant in the room. Investing in developing countries is often seen as riskier due to factors such as political instability, weaker economical fundamentals, and less established financial systems. To entice investors, despite these higher perceived risks, governments of these developing countries, they offer a higher interest rate on the treasury bonds. That is why, to my diaspora friends, it is a good thing to invest in your own country. While the rest of the world seem them to be a higher risk, it's your country and you can enjoy the higher interest rates. Secondly, why the interest rates typically are higher in our developing countries is these countries typically have a lower credit rating. A credit rating in the US or in Norway may be AAA, while a credit rating in a developing country, Kenya, Uganda, Tanzania, Nigeria, South Africa, could be DDD, meaning they're a high risk. So because of this, because of having a lower credit rating compared to the developed world, these ratings reflect the economic stability, political, environmental, and debt levels. So a country with that is economically stable has a better rating than a country that is economically unstable. A country that has better banking systems will probably have a better credit rating than a country with less than perfect banking system. So lower ratings lead to higher borrowing costs. So when a country has a lower rating in credit, when they're borrowing money from anywhere, whether it's the World Bank or IMF, because of a lower rating, they have to get a higher interest rate, so the borrowing costs are higher, prompting governments to offer a higher interest rates on bonds to attract investors. So they need more people to invest. because they get loans at a higher rate. So the best way is to have the population or other people invest. And that's why they offer these higher interest rates. Inflation is another key factor why developing countries often grapple with higher inflation rates. An inflation rate in the developed world, the US, Europe, may be at 3%. The inflation rate in a developing country would be at 8 or 9%. So this high inflation erodes the purchasing power of money over time. This is setting higher interest rates to offset the expected loss in real value of investments. So if the inflation rate is at 8% and the investment is offering you 7%, as you can see, you are still losing because what you're being offered is still lower than the inflation rate. So they typically have to offer a slightly higher than the inflation rate so that it can be more attractive to you to go and invest in these countries. So inflation also plays a very key role. Another reason why developing countries offer these attractive higher risk or higher interest rates is the currency risk is ever present. So investing in bonds dominated in the currency of a developing country carries the risk of fluctuation. And this fluctuation is usually against major currencies like the US dollar or the euro. So higher interest rates are offered to offset the currency risk, and this will attract investors because there's that risk of currency fluctuation. As you guys know, like the Kenyan shilling 6 months ago was exchanging at about 160, but now it's gone back to 130 to the dollar. So these fluctuations also affect the bond market. Another reason why these countries offer higher interest rates is supply and demand dynamics. Supply and demand. Developing countries may have a smaller pool of investors compared to the developed ones. Like the 1% of US is way bigger than the 1% in a developing country like Kenya. So to compete with the other investment opportunities, both domestically and internationally, they need to offer higher interest rates so that they are able to compete at par, or then they can get the same kind of returns on money. Another reason that you need to look at before you go and invest in a developing country that offers you a higher interest rate, which the returns are very good, is the fiscal imbalance around the globe. Because developing countries may face challenges such as high government debt levels or budget deficits. I know most countries or every country in the world, even including the most powerful ones, have budget deficits. But in the developing countries, the challenges are much higher because of maybe fiscal indiscipline. So higher interest rates may be necessary to finance these deficits, and also they're used to attract investors to purchase government debt. So it's a win-win situation. It's a little more riskier, but it offers way more. So the risk perception, credit rating, inflation, currency risk, supply and demand dynamics, and fiscal imbalance leads to developing countries to offer higher interest rates on treasury bonds compared to the developed world. So these higher rates reflect the real ties between high interest rate and high interest rates and inflation. So these higher rates also reflect the realities and challenges of the global economic landscape which are essential for all these countries to access capital and finances for the development of their countries. So these countries want to develop, so they have to have access to funding. So all I can say is it is a good idea to invest in the treasury bonds. It's a good investment, yet it's a little more riskier than those that offer lower interest rates. So with those few remarks, I invite you to the next video that I'll publish shortly. Please subscribe to this channel. I know you've been watching. You watched to this end, and just do yourself some service so that you can subscribe. Anytime I produce a new video, you'll be the first one to be notified. Thank you.